What if I told you there is a legal way to blow past the normal 401k contribution limits and stash tens of thousands of extra dollars where it can grow completely tax-free? Now, this isn't some shady fly-by-night scheme. It's a real IRS-approved strategy called the Mega Backdoor Roth. If you're eligible and you use it correctly, it could add hundreds of thousands or even millions of dollars to your retirement fund. This is the kind of powerful, next-level strategy that the wealthy have been using for years to build massive tax-free fortunes. So, let's talk about the problem. You're a responsible saver. You're contributing to your 401k. You're definitely grabbing that full employer match, which is free money, by the way. And then, bam, you hit the IRS contribution limit. For 2025, that limit is set at $23,500 if you're under 50, or up to $31,000 if you qualify for catch-up contributions. For high earners and diligent savers, the cap can honestly feel like a penalty for doing the right thing. It's frustrating. Once you max out that traditional or Roth 401k contribution, every extra dollar you manage to save has to go into a regular taxable brokerage account. What does that mean? It means you're paying taxes on dividends and you're paying capital gains taxes every time you sell an investment for a profit. The government gets a cut every step of the way. Think about it. You see the debates about tax hikes on the news. You understand that your traditional 401k isn't entirely your money. The IRS is a silent partner, just waiting to take their slice when you retire. You have the income, you have the discipline, you have the drive to save aggressively for your future. But the system itself seems designed to cap your potential and limit how much you can shelter from taxes. It feels like you're playing a game where the rules are holding you back from truly accelerating your wealth-building journey. The more you make and the more you save, the more you end up paying in taxes. It's a frustrating cycle. But what if you could legally smash through that limit? What if, on top of your normal contributions, you could add another $20,000, $30,000, or in some cases, even over $40,000 a year into a retirement account where it grows and can be withdrawn completely tax-free forever? That's not a fantasy. That is exactly what the Mega Backdoor Roth strategy allows you to do. It's not really a loophole. It's more like a hidden feature built into the tax code, available to those who know where to look. This is how you can supercharge your retirement savings and build a truly massive nest egg that the tax man can't touch. So how does this actually work? It sounds complicated, but the concept is surprisingly simple. Think of your 401k plan as having 3 potential buckets for your money. Bucket 1 is your traditional pre-tax 401k. You get a tax break now, your money grows tax-deferred, but you pay income tax on every dollar you withdraw in retirement. Bucket 2 is the Roth 401k. You contribute with after-tax money, meaning no upfront tax deduction, but it grows completely tax-free, and all your qualified withdrawals in retirement are 100% tax-free. This is the golden goose. Now, here's where it gets interesting. Bucket 3 is the secret ingredient, the after-tax, non-Roth bucket. This is different from a Roth. Contributions go in after you've paid taxes on them, but the earnings or growth on that money are still tax-deferred, meaning you'll pay taxes on the growth when you withdraw it. It's the least attractive of the 3. But here's the trick, the magic move. Your 401k plan might allow you to contribute to this third after-tax bucket. And then, this is the critical part, immediately move that money into the Roth bucket. You're essentially using the after-tax bucket as a temporary pass-through to get a whole lot more money into the much more powerful Roth account. Let's run through the math to see just how powerful this is. The IRS sets an overall contribution limit for 401k plans, which includes everything: your contributions, the employer match, and any other employer contributions. So you've made the after-tax contribution. What's the next step? How do you get it into the Roth? There are generally 2 ways this conversion can happen, and it depends on what your specific 401k plan allows. The first, and often simplest, is called an in-plan Roth conversion. This is where the money stays inside your 401k plan, but your plan administrator just relabels it from after-tax to Roth. It's an internal accounting change. The second option is an in-service withdrawal, or in-service distribution. This allows you, while you're still employed, to roll that after-tax money out of your 401k and directly into your personal Roth IRA. The key to making this work without any tax bill is speed. You want to execute this conversion as quickly as possible after making the contribution, ideally before the money has any time to generate earnings. If you convert it fast, the entire amount moves over tax-free. Now for the big question, who can actually do this? This is the most important part because, unfortunately, not every 401k plan is set up to allow for the mega backdoor Roth. For this to work, your plan needs to have two specific features. First, it must allow for after-tax contributions beyond the normal Roth or traditional limits. Second, it must allow for either in-plan Roth conversions or in-service withdrawals of that after-tax money. So how do you find out? It's simple. You need to call your 401k plan provider, whether that's Fidelity, Vanguard, Charles Schwab, or your company's HR department, and ask them two very specific questions. Does my 401k plan allow for after-tax contributions? And if so, does it allow for in-plan Roth conversions or in-service withdrawals of that after-tax money? The person on the phone will know exactly what you're talking about. I want to add a note of urgency here. This strategy, while completely legal today, has been on the chopping block in Washington before. Lawmakers have proposed legislation in the past that would have eliminated the mega backdoor Roth strategy entirely. They've tried to kill it before, and it's very likely they will try again in the future as they look for ways to increase tax revenue. The window of opportunity to use this incredible tool might not stay open forever. So, don't put this off. Don't say, "I'll look into it next year." Check on your plan this week, find out if you're eligible. So there you have it. That is the playbook to building a massive tax-free retirement fortress using the mega backdoor Roth. The steps are clear. Step 1. Call your 401k provider today and ask the two magic questions. Step 2. If you get the green light, do the math to figure out how much extra you can contribute. And Step 3. Set up your contributions and convert them fast to keep it tax-free. If you found this strategy valuable and want more powerful financial insights to help you build wealth, do me a favor and hit that like button, subscribe to the channel, and maybe even share this video with a friend who needs to hear it. Let me know in the comments if your plan allows this. This is Reese from Powerful Individual saying thanks for watching.